Good evening all. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up for the evening of Tuesday, November 12th, 2022. Well, it seems that every hour we're getting another pick by President-elect Trump as to what the cabinet's going to look like. I won't go into it all. I cover it in my newsletter. But we have gotten everything down now. We got a new CIA director. We're getting one person after the other coming in, and it's a very interesting cabinet. I'm going to repeat. He's not a neophyte now. So he knows what it looks like. He knows how to pace what he's got to get done, and we will see how much he's going to get done. The one thing you're looking at, and I think the market is surprised at, is how high interest rates are going. And the reason is the market is not looking for it to immediately see any benefits from all these tariffs that he's threatening to put on. And I don't know how fast he'll put them on. We'll find out. And I don't think he'll just go in day one, say, China, 60% tariff. That isn't going to happen. But I do think the tariff will go on China with the threat there's more to come very quickly if you don't do anything. And I think that Mexico's got a problem in that already the premier out of Ontario is saying to the U.S. that the U.S. and Canada should form an alliance, stay unified against all this foreign money that's going into China, into Mexico that is primarily Chinese, and thinking they can skirt the issue. Well, you know, China's pretty smart. They can make products all over the world and have that money one way or the other hidden. But when you can see it, it's a problem. Keep that in the back of your mind and expect there to be a lot of talk about this as time goes on. I am not surprised to see a board of red today. I mentioned to you yesterday, big up days on a Monday or down days on a Monday often cause a Tuesday reversal, especially in stock indices. I mentioned Yale Hirsch, where I learned that from, the Trader's Almanac. As you can see in other parts of the market, you're knocking on the door of all-time highs in NVIDIA, and you're starting to fill gaps in Tesla. As I said, Tesla's up because of President-elect Trump, not because Tesla's suddenly become a better company, delivering more cars, making anything more. Not at this point, at least, yet. That can be coming. I was impressed today to hear, and I read it this morning, that Los Angeles, if I read it right, and I believe I did, they're through with the experiment in parts of LA, and they're going to open up greater LA to self-driving cars now. I was there and just witnessed it, and it is an amazing sight when you see them. So that will get very interesting. These don't look anything like what Trump is saying his version will look like. When you see them, they got mounts. It looks like an old-time, to me it did, like a 1950s police car with bell things on the top and all their cameras, and they're looking all around. And sensors. We can see Boeing still in trouble as the company is just fixated now, and very fixated on the fact that they're trying to get quality right, not make so much in planes. And they only delivered 14 airplanes last month. Not very good. Rivian today, after the market, I heard that Volkswagen's going to increase their $5 billion investment and add $800 million more. They're very excited about the tests that they're getting done with Rivian. Apparently there's 1,000 technicians, combination of Volkswagen and Rivian ones, working together to knock out products, and they're hoping to have their first cars out maybe 2026, 2027, but the technological advances are going to go into Volkswagens much faster than that. So it's interesting. When you hear nearly another billion being thrown in and promised, that's probably going to lift that market a little bit in the aftermarket. As I said, uranium, probably waiting for President-elect Trump to say go, go, go on that. Oil down, bonds down, as you can see, BND, and that's, again, the Trump trade. So when we look at Tesla, we're filling the first gap. I don't know if we'll have the room to get down here. It'll be interesting to see. But what I call that exhaustion gap, well, it exhausted. Now we have to see what the market does from there. But that's what I think occurred. you can see that the pattern is still one of bullishness with higher highs, higher lows. It's on a stick, if you will. Where would you put a stop if you buy it here? That's the big question you have. You're not going to, I hope, tell me you're going to put it all the way back down here and risk almost $100 a share. That's 30% risk. So you need a new chart pattern to work from if you're looking to be a buyer. The market didn't spend very much time over the upper Bollinger Band. It's pulled inside of it. It has an embedded reading. As long as it holds, what I think one-way traders might look at it is buying on a break in the morning if you're not under 79. If you are, I don't think they'll buy it. This is your first move under the Bollinger Band. I doubt traders will have resting orders to buy. I think they'll watch it the way that I'm saying. But did we embed? All right. Both numbers today were over 80. Day one of embedding. Day two of embedding was Monday. So was Friday an embedded reading? It was. You had 3 days in a row. So I'll stick with what I told you. By the way, when you close near the low of the day, as you did in Tesla, on a pretty reasonable sized range of $12, it puts a lot of pressure to lose this red line. It's going to drop rather smartly in the morning. First thing, keep your eye on that. Live entertainment. Why not look at this? Get rid of some of the others we're looking at. I saw the Kramer interview with it, and of course, he was all over them. He probably wants free tickets. Higher lows, higher highs. I would not tell you to buy a market that is over an upper Bollinger Band or overbought. If you like it longer term, maybe I'll even cover it on the weekend chart, and we'll look at the weekly charts, because I do think it's a fascinating company. I had good friends, acquaintances might be one of the words. One's a friend, one's an acquaintance, that owned a big company in Chicago, the biggest that was here. And they sold out to Live Nation years ago. And these guys were rock and rollers, I can tell you. Their company was phenomenal. And you can see how it's come up and back down, but they're not just the U.S. These guys are all over the world now. And what I love is they don't just sell and run a concert. They do the whole thing. They manage where the performer should go. They help with the ticket price, what it should be. Their margin on that is not large. The money that is made, and people have to understand it, aren't from these companies. It's the ticket scalpers. It's the way that they can get into the system and beat all of us to get the tickets. Now, if Live Nation owns that, that's their problem. They deal with it. But if that's not them, then what do? That is why the government has got them on the hot seat. Their business model, I think, is excellent. CrowdStrike, you can see how the market is riding the upper Bollinger Band, but it's still not embedded. So at any point, a correction can happen in that. But this is a new high from that washout move. And understand what it is. This market came back. We talked about it, played it a few times, and now I'm looking for the market to do even better. Uranium still has the 18-day average to deal with, but once it can clear again, 31.78, maybe it gets something going here. The fact that this low just took out that low doesn't excite me on the trade. This has been one of these trades that you think it's so good, uranium, and then it takes it all away, and it's been doing that regularly. I will say, after you hit this level here, you went up to a new level that you have found, and that is important. I think uranium will be a winner on this whole move over time. In K-Web, I look at a market with lower highs, lower lows, and I told you, I think China's got a major problem. If the government doesn't address the bigger issues, they are not just getting to the regional government's money. It's got to be infrastructure. It's got to be getting consumer confidence back in ways. And dealing with this property nightmare they have, it just isn't going anywhere. And as they slow down, Australia slows down. Countries that export to China, they're seeing their orders slip in. Saudi Arabia came out and said they're going to be doing 100,000 barrels a month in OPEC, total OPEC sales each day, in large part because of China. There's a couple of countries that have got themselves into a problem. There's a December 1st meeting. Iraq's one of them. They just keep overproducing. Those people probably either have to leave OPEC or if they stay in, getting the compliance, they're not doing it. So we'll see what OPEC can do. I am not surprised that Toll Brothers backed away from yesterday's rally. It's what I told you I expected to happen. I also told you that I didn't get this rally in the home builders. How can you keep this rally going when interest rates just keep going up? You're at 4.43 in the 10-year note today. So you just keep coming up. You've up 70 basis points in no time at all. Isn't that as big as the Fed cuts were? We had 75 basis points of cuts. You've wiped that whole thing out. So the market, not the Fed, is saying the Fed's got it wrong. That's my opinion. The Fed has it wrong. The market is telling you that higher interest rates are demanded because the market is looking at what a Trump presidency and actually what a Biden presidency or a Harris presidency would have meant. All three. More spending, no cutting in the budget, not the thing to do. And the market is recognizing that. I mean, do you see President Trump coming out and saying we're cutting anything? He's got Elon Musk there that's going to go through things to a degree. I have my own doubts that Elon's got the time running his businesses to take on that role and do it himself. He's got to deploy. I don't know how he'll do it, but he's a genius. I'm not. He'll figure it out, I hope, for our benefit. All right? Do you think we're going to pay him? I don't think so. All right, but that's how you look at it. In the financial services, not a market I even want to think the short side of unless we see some relief coming out of CPI, PPI, and jobs reports, all right? Tomorrow you get CPI. If you get strong inflation, do you honestly believe that you're going to get the Fed to cut? Strong inflation, cutting interest rates feeds inflation. You cut because the economy's slipping away and you're trying to cushion it. We'll see. We're not at that point. I'm making it simplistic. In part of it is. In the industrial sector, okay, you're running into the resistance up here of the Bollinger Band. Oh, so many markets, so many have had this Trump trade and they haven't seen a correction from it. Tesla's the first to show you it's filling a gap. That doesn't mean it's correcting as much as you think. As I showed you, you'd have to risk $100 a share back to where the market was pre this whole thing. XLE, all right, on the energy sector, I'm going to repeat Trump's words. Drill, drill, drill. And that is exactly what the model is going to be. So the energy sector I like, oil I don't like. There's a difference between the two. In gold, looking at the market, still coming down. This is a washout in the market. It's a margin call game. It's many things. If you don't get a bounce starting by Thursday, the game, in my opinion, got to be out of the gold and just wait and let it regroup and do what it is. You have a very small time frame here for it to regroup. Silver should do it right here in the regrouping. I would not want to press it on the short side against the 100-day average in the Bollinger Band. Copper market is now under everything, and be careful. You might get that 18-day average starting to crisscross the 100. It'll add fuel to the fire. It's just like got your charcoal going and you're spritzing it away. That's what it is. This is total rejection in the world market of what China's stimulus package is doing. It's the canary in the mine. BND, all right, these are your lows. Are we going for them? I mean, when you go up, that's falling rates. When you come down, and this is, remember, this is the September cut. You peaked. And the market has just done one thing, relentless of adding interest rates. At the same time, making the dollar look good. The economy's still strong, absorbing these high rates. That's what you've got going on. And FXC coming down. There's still talk. 105, you're not far away from it, about 100 points or so on the FX markets when you look at it. And if that gives ground and we don't see anything backing off in rates, 100 parity could be a game that traders seriously talk about. I personally think it's too soon to say that. I think it's the 105 area. You're oversold. I'd be careful in these markets right here. I am not bullish. So don't think that I am saying bullish. What I am saying is you're now 3 days in a row under the Bollinger Band. You're soon going to start going to the right-hand side of it. That's what I am saying. So I'm Ira Epstein. I will talk to you all tomorrow morning. You have yourself a great evening. Take care.